Do you remember when Donald Trump said this? Maybe we'll pay off our $35 trillion, hand them a little crypto check. Terrible Trump impression, but you get the idea. That was last year. But what exactly did Donald Trump mean by it? It might have seemed like just another Trump throwaway comment, but actually it hinted at a monumental shift involving crypto, the dollar, gold. Big shit's happening here. Plus, it looks like Russia knows exactly what's going down and is publicly calling it out. So let's break down what the US admin has cooking, whether it can work, and how you should position yourself to protect your wealth and maybe even make a profit. First, is this real or just some Russian shade being thrown around? Well, here's the story and you can judge for yourselves. Dmitry Kolyakov, one of Putin's advisors, spoke at the Eastern Economic Forum earlier this month and straight up accused the United States of preparing the reset of the monetary system, claiming that the US is planning to shove a chunk of its enormous debt into crypto, specifically into stablecoins, and then devalue the debt and reset the global economic order in the process. Sound crazy? Maybe at first, but then look more closely and it starts to make sense, as there are policy moves and historical precedents that all point in the same direction. The United States, remember, controls the global reserve currency. They can do it. So if it happens, what you might get is, well, the first move, tokenize the debt. The reset requires a vehicle that can absorb US debt in a new wrapper, and that's where stablecoins enter the picture. Just a few months ago, the Genius Act was signed into law to regulate stablecoins, to define reserve requirements, and most importantly, make sure that stablecoins are backed by US treasuries. On one level, this looks like innovation. The US is cool, kid, man. Hello, fellow teenagers. They're keeping up with the pace of global innovation. Pretty cool. But also, this is how you start building a novel new system that quietly soaks up government debt as stablecoins backed by treasuries create a potentially huge source of treasury demand that's already there. Between USDC and Tether, they've soaked up hundreds of billions, okay? And that matters a lot. Now that foreign buyers, including central banks, are actively dumping US treasuries, they need a new buyer. And those central banks, by the way, are buying gold instead of US treasuries. The US knows this and sees the buyer crisis coming. So if demand dries up in the traditional markets, then why not go tech route, bro? Use stablecoins, create a parallel market where digital demand is engineered. Kind of genius, right? Just like the name of that critical new legislation. Then the second move, normalize the shift. Now, before we get into the details of that, guys, if you're trading the cryptocurrency markets and you need a good place to trade at, check out Femex, OG cryptocurrency exchange. I've been trading over there 4 years, and here's the deal. Deep liquidity, worldwide access, meaning anywhere you live, you can probably use Femex. You might need a VPN in some cases. They have rock solid security, and right now they're giving you some sweet reasons to sign up and start a new account. Deposit $200 or more, trade one time, and you'll walk away with $50 instantly. On top of that, there's up to $800 in trading rewards waiting for you, plus a bonus 1 Solana if you hit the top trading requirements. And here's the kicker. 5 traders this month will each win 1 Solana. So if you're serious about crypto, it's never been a better time to make the dive and head over to Femex. Link down below where you can get started. Back to this story. Look. This is where the reset goes mainstream as crypto adoption is integrated with TradFi. So alongside Coinbase retail trading and on-chain degeneracy, the crypto world now includes BlackRock, tokenized NASDAQ trading, and the Fed loosening guidance around banks using digital tokens and in banks even being able to issue their own stablecoins. There are states establishing strategic Bitcoin reserves. The US Treasury is holding on to its seized Bitcoin, while the possibility of a national Bitcoin strategic reserve remains very much at the forefront of policy discussions, and how that Bitcoin is acquired is really the only sticking point. And this all works to shift public and institutional perception, sending a message that says, trust us, crypto is a real thing now. The US government, the most powerful government on the planet, the most powerful economy on the planet, which runs global reserve currency, is all in on crypto, baby. So when Trump mentions that he might hand them a little crypto check, he's aligning the presidency with one of the most important financial shifts that's happened in, well, a very, very long time in the world, and setting the tone for how the format of US debt can evolve. Plus, there's also the possibility of a US gold revaluation, which would be a massive, crazy thing to do. What this comes down to is that the US still has over 8,000 tons of gold officially priced at $42.22 per ounce, which is bonkers because the market price is well over $3,600. That $42.22 price dates back to 1973 when it was set by law. And as this price is purely statutory and used for accounting purposes, it hasn't been updated because the US hasn't needed to revalue its reserves, so it's basically a legacy figure frozen in time. But if the US were to revalue its gold, the accounting gains would be massive. Maybe just a little bit of that money spills over into Bitcoin. Wouldn't you know it, the Federal Reserve recently released a research paper analyzing how other countries, including Germany, Italy, and South Africa, have previously used gold reserve revaluations to patch up their finances. It doesn't really fit, you're not really fixing anything, you're just kind of cooking the books a little bit, but it works. Now, this doesn't mean the US is about to go back onto a gold standard, not even close. But it could use gold revaluation to shore up the Fed's balance sheet, inject liquidity into the system, and potentially buy Bitcoin. So the reset narrative includes moving dollars and debt into stable coins, which becomes major buyers of treasuries, recalibrating the system around on-chain assets, and possibly also revaluing US gold reserves in the process. So with all that in mind, what's a reset mean for you? Historically, when the United States has shifted its monetary framework in such a dramatic fashion, real assets win. Land, commodities, gold, quality stocks, and more recently, Bitcoin too. This will be one of the biggest, if this goes ahead as we think it's going to, this will be one of the biggest shakeups in global financial monetary policy since, well, the 30s or the 70s. And look, this all goes back a long time. Every time the US does these big things change, okay? When the US first moved away from the gold standard in 1933, big changes came. In 1971, the end of the Bretton Woods, big changes came. Post-2008, when the US began QE after the great financial crisis, big changes came. In each case, the US shifted its monetary structure to loosen constraints, expand liquidity, and escape obligations. And every time, fiat lost intense amounts of value while real assets gained in price. To an extent, it's not that everything's going up, it's that fiat keeps going down. But anyway, that's a different conversation for a different video. That's why right now, central banks have been on a multi-year gold buying spree all around the world. Russia, China, and many, many more, Turkey, and on and on and on. And gold is soaring. It's why BRICS countries have been brainstorming parallel financial systems, potentially even using blockchain technology themselves. They know the writing's on the wall and they want to have a seat at the table. That's why the Fed is talking about reserve revaluations and digital rails. Now, for sure, no one can say whether this entire crypto reset theory will fully play out, and there are other reasons to move finance on chain too beyond just global domination of the reserve currency. Stablecoins work, they're more efficient. I mean, goodness gracious, you ever tried to send money from one country to another using the banks? It's terrible. And then you use Solana with stablecoins, it takes a second. Dramatically different experience. But if you did want to pull off a crypto-related reset to ensure the lasting dominance of the US dollar and sort of cuck China and Russia and all these guys, then the infrastructure is being built right now. The laws are being put in place and the incentives are present. As for public awareness of what's going on, though, it's fair to say that most people are asleep at the wheel, as usual. But whether you think it's 4D chess or just geopolitical bluster, it's evident that current systems are close to cracking and change is needed. The debt cannot continue like this. They need a solution, and crypto may be it. And if it happens, as I've described here, then people who see it early and get positioned in hard assets will come out best placed on the other side, because make no mistake, that debt bubble is going to burst. The piper will need to be paid. And whether they extend the dominance of the US dollar a little bit longer with stablecoins or not remains to be seen. That's the move, though. And if that happens, either way, everything's going to keep going up in price. Make sure you have some Bitcoin just in case. Thanks for watching.